Joining me now is Stuart Thomas, founding principal at Precidian Investments. Stuart, thank you so much for joining.
Thank you, Kristen. Thanks for having me.
It's great to have you, and we've seen stocks recover a bit after a little choppiness around the new year. What's behind this?
Well, I think it's enthusiasm over a new administration that is clearly pro-business. So this is that, a strong dollar, strong economy, energy independence. There are a number of factors. I think they're already assuming the successes that this new administration is going to have.
Can this recent momentum in markets this week continue?
I absolutely think it can. Again, President Trump and his incoming administration is laying the groundwork for what could potentially be the biggest resurgence and boom in the U.S. economy that we've seen in quite some time.
And when it comes to what is driving that, you talked about the policies. Are there sectors that you anticipate will benefit?
Well, Kristen, I'm not going to make calls. I'm not a strategist. I'm not going to make calls on particular sectors. I look at it from a macroeconomic standpoint.
And so inflation data came out this week showing that inflation was tame, ticked up a little bit in December, but nothing above economists' expectations. How do you interpret that in terms of where the pace of price gains is headed?
Well, I think it's absolutely positive news. I mean, CPI a little bit weaker, but we are showing progress on the inflation front, which leads to less steep cuts from the Fed. That's very beneficial to our economy.
And in terms of what you expect for growth, is there a target that you see for GDP this year?
Well, I think if you look at the Atlanta Fed, their GDP now model is running well above the average trend line of about 1.8%. I think their model is they're now calling for about 2.4% in the fourth quarter of last year. I would think that would continue to tick higher as President Trump's policies come into effect.
And so we do see the inauguration set to take place on January 20th. That's Monday as the markets are closed for Martin Luther King Jr. Day. Are there executive orders that you anticipate the president-elect will enact immediately?
Well, I think there are very big policy issues that need to be dealt with, right? We need to deal with trade imbalances, countries that are running massive trade surpluses with us. He wants us to put us on a fair footing. Obviously, immigration is a big issue, deportation. So I think there are a number of massive policy implications that he'll have to implement initially through executive order.
And you expect those to happen pretty quickly?
I would think so. I think he's indicated that quite clearly.
We've seen an IPO just yesterday, big IPO, the biggest this year in the energy space. We anticipate another IPO here at the New York Stock Exchange next week. What does that signal to us about deal activity this year?
Well, I think there is renewed exuberance in the market. That's going to bring people to the market. IPOs, funny, I used to do that at Merrill Lynch. I would think you'd see a big pickup going forward as the economic conditions improve.
Yes, and the energy space, our guest earlier was telling us he is pretty bullish on. Beyond energy, healthcare, does that look attractive to you?
I think healthcare is in need of significant reform in terms of pricing. I think that will lead to consolidation, so I think there are definitely opportunities there.
In terms of debt and spending, give us your rundown there, because we know that could factor into this inflation picture ahead.
Well, it absolutely does. This current administration has added more than $11 trillion of debt to that the American taxpayers are going to have to pick up. We've got a couple of trillion coming up for refinancing. That's absolutely going to impact rates. So it's a significant problem. The best way to get out of a debt is through growth. And President Trump has pro-growth policies on his platform.
Big banks kicking off earnings this week, better than expected results. That plus tame inflation adding to the gains that we see. The S&P up about 2%. Just this week alone, the Dow up nearly 3%. What do you expect to transpire in the weeks ahead as more earnings reports come out?
I would think that you're going to see a continuing improvement in earnings and future outlooks. That would be my best guess.
Any commentary from CEOs that could give us a glimpse into how they plan to navigate this new administration?
I think it depends on what side of the aisle that they come from. I think most who are agnostic and focused upon their business absolutely support any kind of policy that an incoming administration would do that would be pro-growth.
AI, is that attractive to you as an investor?
So AI is beyond the scope of my knowledge. I think it's fascinating. I think if you look at Merrill Lynch's surprises for 2025, one of them is it's going to run out of material to learn from. I find that astounding, the rate at which AI is learning. I think AI has the potential to bring great benefit to mankind, but it has to be done in a controlled manner.
Stuart Thomas, founding principal at Precidian Investments. Stuart, thank you for joining.
Christian, thanks for having me.